All right, guys. I'm a little bit late today. Whew. All right, so we had the Nvidia split that happened. You can see it in the middle chart. It is at 121s, which is a pre-split price of about 1200. It dipped down under, the 1260 price. It's at about 120s now, 121s. Slightly green on the day, just went green on the day. You can see it on the middle chart. We also have the Q sitting mostly flat. GameStop down a little bit, but gapping up this morning. So we'll see if those continue. I know I'm a little bit late this morning. Honestly, I need some coffee. Uh, I mean, the market's slightly gapping down, I guess. I mean, it's down a little bit. Uh, Q's at 462.60, so I mean, it's kind of down. It's not like it's super down though. Like we could look at the SPY. SPY's down a little bit. It's at 533s, but it's mostly flat. It's not really. I wouldn't call this really heavy down or anything like that. I mean, look at an hourly chart. You can kind of see the pullback is just this right here. Like it moved up some, and now it's dipping down a little bit, and who knows where it's gonna go now. I don't know. We'll see. I did watch the Roaring Kitty stream on Friday. I wasn't able to live stream. Honestly, my internet was out. My internet cut out. Alright. I know I'm really late this morning. That's alright. Oh, man. Alright, guys. So, yeah, I didn't get enough sleep last night. Whenever, like I got to bed too late, and then as I'm like going to sleep, I just kind of lay there in bed. coffee for sure. Again, I'm a little slow this morning. Oh, dude, I'm tired, bro. I didn't sleep enough, man. Oh, I'm just tired. I'll still trade though. Let's look at the news. Alright, so Moderna positive phase 3 data for combination vac. Yeah, we had internet issues all Friday. AMC's a little green today, but most of AMC and GameStop dipped a little bit on Friday. Tesla at 178. Nvidia is still slightly green today, though. You can see they did their split this morning. They came all the way down. You can see Nvidia share price is now 120, which is what the split did here. What's up, Blaze? Here, let me look at some news stories today. Yeah, dude, but I was lying in bed, and I was in bed relatively early, but I was lying in bed, and I just couldn't freaking sleep, dude. My eyes were closed, but I just couldn't sleep. All right. All right, so Nvidia AI chips disappoint. So Nvidia's new AI chip, the Blackwell, failed to impress investors, leading to a 3% drop in shares in pre-market. You can see that 3% drop right here, although it did kind of bounce back pretty quickly. It wasn't quite a 3% drop. It was a $3 drop at a $120 stock, so it was a little bit less than 3% actually. If you look at the percentages really here from 121s down to 119, you know, it's a $3 drop at a $120 stock. It's roughly 3%, but it's a little bit under that. The market's reaction was muted due to concerns about production complexity and potential regulatory hurdles, according to Business Insider. Okay, AI is not accurate, dude. AI said Tesla shares fell 8% this morning in pre-market. Okay. These are wrong. It says Tesla leads pre-market losses. I look at Tesla. Tesla's barely freaking down. AI, come on now, get better. I'm going to tell them that too. Fed rate cut expectations. Stronger than expected factory data has led traders to reduce their bets on an imminent Fed rate cut. The ISM Manufacturing Index showed expansion for the first time since September, sparking concerns that the Fed might hold rates steady longer than anticipated. Yeah. Oil prices are surging. Let's see if that's correct. I gotta back test these. Oil prices are up a little bit this morning, but they're not up that much. Yeah. Here. Some of these are wrong. Tesla is not down. 8%. Do better. AI. Do this again. But back check the news to make sure it's true. With Yahoo Finance. Alright. Okay, it did it again. Tesla is currently, now I'm arguing with AI this morning. I know I'm tired. Tesla is at 177. Or Tesla is at 176. 85 in price. It closed at 177.48. That is not 8%, and that story is just not accurate. Please do this again, but back check these stories using Yahoo Finance. Alright, let me try it again. Arguing with AI. Alright, I guess everything else was wrong. Was right. Mixed market. John, you got into Salesforce after the dip? Yes, I did. I'm up nicely from it. My average price is 224s in Salesforce, although I have sold a lot of it already. But yeah, we're up decent in it. Again, we bought the dip. You know, that trading strategy works really well. People like to make fun of my trading, but in the end, dude, these dips that I buy are usually very accurate. I bought a couple things back then too. I bought Airbnb, I'm green. I bought Alibaba, green. I bought Boeing, I'm green. I bought Salesforce, I'm green. I bought CVS, I'm green. I bought Intel, I'm now green on it. Although I did take some off of Intel, so I probably still would have been red on that one. I'm in Nike. Nike is now green as well, so we held Nike to green. We bought Roblox. Roblox were green. You know, we bought Target. We're green on Target. We already took profit on that one too. We bought Uber, we're green. So almost every dip we bought after earnings, we're now green on. Again, this is the FOMC week. Yeah, I'll probably sell mine pretty soon. Like, I already rode the bounce back on Boeing a lot. Again, my average price on Boeing's 172s. It's at 190s. So percentage-wise, I'm already up enough. I don't, you know, I can always add it back. But I think I'm going to sell right now my Boeing position. All right, I just covered it. I'm just already up so much percentage-wise in it. I just think it's risky to hold through. So I'm just going to cut it and limit, you know. If it makes money, it ain't stupid. Those people are trading with upfront opinions that aren't great for trading. Yeah, I mean, I think the problem is that people get so biased against specific stocks that they're blind to where the edge is, you know? So they hate stocks so much, whatever the stocks are, that they're just blind to what real edge is. You know, they miss out on real edge, hating individual companies, getting pitchforks out and hating individual companies that they miss out on edge. You know, honestly, I don't care how bad I think the company is. If it drops to a certain extent, a lot of the time I'm still willing to buy it. Now, this was within reason. Like, I'm not going to do this with like something like Beyond Meat. Like Beyond Meat, I think could just keep on going to zero. I'm not going to buy it no matter how cheap it gets. So there's some companies where I refuse to buy the dip. But if the company has good numbers somewhere, like Snapchat is a good example of this. Snapchat's incredibly hard to monetize, right? But regardless of that aspect of its monetization problems, it has hundreds of millions of daily active users, and it's very relevant culture-wise in the United States. You know, young people use Snapchat. And so hundreds of millions of daily active users, young people very interested in it. It's logical to consider that most people or that young people are eventually going to find a way to monetize this platform for young people, I mean. And so when it dipped down to $8, $9, $10 a share, it just seemed reasonable to buy that, and so I did, you know. But this is a company where sometimes when I buy it, you know, people get weird, they get upset almost, And so I think they're just too emotional about what they're buying. I think I'm rigid with what I buy, but I also think that people are getting weird with the wrong companies. Silver and gold only money. Jason, do me a favor, man. Tell me, what does silver and gold actually do? Like, what's the use case argument for silver and gold? You know, in your world, meaning a world without technology for the most part. What's the use case argument for silver and gold, brother? You know? Yeah, buy gold. I'm in gold right now. I'm not against gold at all. Like, I'm in it. I've been in it. It's one of my highest performing trades. It took a little bit off lately. Yeah, but gold's not the oldest form of currency either. You know, I would argue the oldest form of currency is food. You know, people traded food and clothing before they traded anything else, including gold. Like they made jewelry and stuff from gold, you know, but I just never understood people saying that gold was the only currency. Okay, so let's imagine let's imagine the grid goes out and everybody has to fend for themselves essentially. You know, what are they going to do with gold, brother? I would argue food. You know, food, maybe gas if cars are running, shelter, clothing. I would argue that's going to be much more important than a shiny rock that nobody can do anything with, you know. But I mean, hey, again, I'm in gold. I believe gold is one of the best inflation hedging investments that you could get involved with. I think most people, if they would have just hedged with gold, bought gold, let it appreciate over time, they're going to keep up with inflation to a certain extent. Gold has, you know, over 7x'd in the last 20 years versus the S&P, which is about 5x, 4x, right? So gold has outperformed the S&P over the last 20 years. And so in that regard, I understand its use case argument as an investment, as specifically an inflation hedging investment, right? I think it's incredibly useful in that regard. What I'm talking about, though, is that if the world starts to turn and the world ends, people aren't going to be using gold for anything. Gold doesn't do anything. Yeah, ammo, you know, a lot of that stuff probably. Gold has a value because there's a limited quantity of it and it can be physically traded in a world without technology. Sure, but I think yeah, I mean, I'm not arguing it's not going to be somewhat valuable. I just think there's going to be more important things in a ish hits the fan scenario. You know, I think there's going to be more important things than shiny rocks that people are going to be trading. But that's just me. It depends. Anyways, GameStop at $30, pulling back a little bit. Let's see if it holds. Roaring Kitty did his stream, and now it's pulling back some. You know, what's interesting is during the Roaring Kitty GameStop stream, GameStop got halted multiple times on the downside. Interesting. All right. What's Nvidia PE ratio? It's something like that. But I mean, again, yeah, you know, we had this conversation when Nvidia was at a post-split price of about $100, right? So it's up about 20% from where you and I, you know, last had this conversation. What I'll say is that the PE ratio has mostly been the same over the last year for Nvidia. So, like, I would understand your argument if earnings for Nvidia hadn't paralleled the gains that the price has made over the last 2 years, right? I would understand it a lot more. If we look at Nvidia, right? Let me look at the actual PE ratio. Let me calculate it really quick. I think you might be right at 70s, but I think if you look at it a year and a half ago, the PE ratio was 70s. So I don't think the PE ratio has changed very much over the last few years. You know, so like I'm looking at historical PE, not forward PE, just to clarify. All right, wait, this is AMD. Let's take a look at Nvidia. All right, so 612 was the last EPS rate they showed. 612 plus 516s plus 402 plus 270 equals 18 yearly EPS. So I mean, it depends on how we calculate it now. I mean, we got 18, so we can do 120 divided by 18. And that's going to give us a PE ratio of 6. But we already know they split. And so, yeah, they're, we haven't had any updated quarterly EPS. So it's really 1,200 divided by 18, which gives it a PE ratio of about 66. But if we look at Nvidia a year and a half ago, the PE ratio was the same. All good, yeah. Okay. Yeah, it's all good, bro. I'm not arguing with you, brother. It's all good. Like, we can agree to disagree. You might be right. Honestly, I think the biggest chance of a stock market crash is if Nvidia turns, and I think it could turn. If Nvidia turns, a massive sell-off happens in Nvidia, consequently dragging the rest of the stock market down with it and causing massive percentage drops. I think that's very possible. I'm not saying it's going to happen. I think most people know I don't necessarily believe it's going to happen, but I think it's possible. And I think that's the most vulnerable the market is right now towards any main catalyst event of downfall in markets. I think that's what's going to happen if the market crashes. Is Nvidia is going to turn and the rest of the market's going to follow it and freak out. All the investors are going to panic and sell, and it's going to dump the entire market. I think I don't necessarily think it's going to happen. I think it's possible. So the Fed meeting happens. Oh, damn. We already got 400 people here. What's up, guys? We're here today, chat. We're here today. So, look, I'm not trying to get political. But you know how I said that some people almost want the market to crash because they dislike the other side so much that it's kind of confirmation bias. Like one side tries to make whoever's not in power tries to make it look like things are just the worst it could ever be. And that some really politically biased people get wrapped up in that and start kind of being toxic from it. What's this guy's name? Jason Lab, whatever, ladies and gentlemen. Again, it's all good. I'm neutral politically. I dislike both sides here, But, in the 80s, inflation was almost 20%. Things could be a lot worse. than what they are now. Things aren't rosy and fine and everything's all good, sunshine, but things are certainly not like the end of the world scenario that a lot of people claim to be. And I've heard the end of the world scenario for the last decade here, you know. Yeah, so let's not argue about politics either way. Regardless of which side you're on, it's all love here. You can be here, you know. I'm pretty neutral. I'm somewhere in the middle. So, but if I told people how I really felt about it, both sides would probably hate me. And so I think that's the way I'd rather keep it. So just no political talk, chat. Yeah, Broadcom has had a crazy rise, Yair. AVGO, it's had a crazy rise, brother. Like crazy moves. Ridiculous daily chart. A weekly chart's even crazier. So Broadcom has had one of crazy rise. It's up a little bit too much for me personally, though. Broadcom, AVGO, up a lot. People who are apathetic to politics are toxic? How, dude? You know? Like, listen, man. I respect somebody a lot more. Like, anybody that's looking at the political landscape objectively, in my opinion, is going to see that both sides are incredibly toxic in their own ways, right? Anybody that's looking at it objectively, you know, in my opinion, is going to see that, you know? And so I don't think those who are neutral politically are, you know, it's not that well, can I be the cousin Eddie of the group? You mean you only show up once every, like, 5 years? You know, say a toxic thing and then leave? Sure. AMC at $5. Let's see what happens. GameStop at 30 plus. Yeah, it's all good, guys. I'm just kind of trolling the trolls a little bit. Yeah, AMD is up too much, too. There's certain stocks that are just up way too much. I'm in Nvidia right now. I've been holding it through the split. Anyone that says the current state of the economy is working must be a multi-millionaire. I mean, I don't know. I don't think the economy's ever working or not working. I think at any moment in time, you're always going to have unhappy people. Again, if rates are low and the economy's thriving, inflation is going to make people unhappy, right? If rates are high and the economy's being pushed down by the Fed to discourage spending, you know, real estate professionals, lenders, you know, there's a lot of unhappy people in that scenario as well. And no matter which one we get, people are going to be upset, right? That's the nature of things. I think, you know, in terms of Federal Reserve decisions, they can't really make everybody happy. It's not a reasonable expectation. You know, I think what we're currently in right now is the consequence of the pandemic, which, you know, I don't think we should just, I think the pandemic is something that just kind of happened. And again, I'm not going to get too political or anything with it, but I'm very neutral politically, guys. We are in a silent depression right now. In what way? Let's talk about it. Listen, we could talk about it. It's all good. As long as you're not disrespectful, I won't ban you either. I think it's good conversations to have. What I'll say is that payroll numbers coming in. What did they come in last week? They came in Friday. Let me see. Unemployment at 4% and payroll numbers coming in super high doesn't really signal a depression, you know. A strong labor market, low unemployment doesn't really signal a depression. A depression is 2 consecutive losing GDP quarters, and we don't really have that right now. Stock market was always supposed to be apolitical for a reason. Right, for sure. Honestly, I don't care about politics when I buy stocks. Like, some of my best trades are trades where political biased people would get super mad at me for. And that's all right. Like, I'm just looking for value. Yeah, I mean, I don't think a lot of you guys understand what a depression or recession is, guys. You know, like, look, I explain this once per day. Let's talk about it again, okay? So a depression is defined, right? And again, you hear buzzwords like they changed the definition or whatever it is. We're talking about right now. That was 4 years ago, 3 years ago. One side of the spectrum, okay? One side of the spectrum has to do with weaker jobs, GDP, too little of spending, weak spending is one side of the spectrum. Okay, weak spending is what one side of the political or of the economic spectrum looks like. Okay, this is weak spending. On the complete other side here, right? On the complete other side, too much spending. Okay. Right? So let's talk about economics 101 here for all the people in chat. Too much spending. Okay? So here's the economic spectrum, characterized by weak spending on one side and too much spending on the other. With weak spending, what do we get? We get recessions, depressions, nobody's working, people are unhappy, although we do get more damage to inflation, right? If you want inflation to actually go down, which is very rare, most of the time inflation's not going to drop, this is the side you want to be on. You want weak spending, too little spending, whatever that is, right? So that's what you want here. If you want a thriving economy and low interest rates, you want the other side here, which is too much spending. Okay, when the Fed reduces interest rates, what they're doing is they're bringing interest rates down to try to influence spending. That usually means we're around here. They're trying to save the economy for this area here. It means too much spending, too little spending, not enough spending going on. So the Federal Reserve will step in. They'll bring interest rates down when people are paying less money on a mortgage, on auto loans, and lending in general. They have more money to spend, and so by bringing interest rates down, and they can do this through QE, they can do this through rate cuts. This contributes to more spending on this side. Okay, right now what we're actually in. The reason people are unhappy right now, because again, somebody's always unhappy. Whether depending on which side you look at, somebody's always unhappy. If we're over on this side, right? If we're over on this side, the consequence is too much spending, right? It's the opposite of a recession and depression. The consequence is inflation. The more we pivot to this side where we got too much spending, the more inflation spikes. If we look at CPI inflation, right? And this drops, CPI drops on Wednesday. So this next one drops on Wednesday. If we look at CPI inflation, you can kind of see in 2020, the Fed stepped in and they cut rates. They brought interest rates down to almost zero. The consequence of that was inflation spiking up to 9.1% after the pandemic. They stepped in because in the pandemic, we were at risks for a recession or depression because nobody was working. People had to stay home. Like a lot of stuff was going on. And so the Fed stepped in and they influenced interest rates and brought them down to almost zero, contributing to more spending, right? But pretty soon we got to this level here where we, stayed, which was too much spending, right? We got over here, too much spending. So what does the Fed do? The Fed starts to raise interest rates to consumers instead of lowering them like they did in 2020. They start to raise rates. They start to do what's called quantitative tightening, which means that they're just not buying up bonds and injecting liquidity in those markets for banks. And so banks raise interest rates to compensate for it. And again, the consequence is hopefully inflation starts to drop. What people are really unhappy about is that inflation spiked because of this from too much spending, right? So inflation got up, and very rarely do prices actually drop. We talk about this regularly. If you look back at the last 20 years of inflation rises, only 2 times in the last 20 years have prices actually gone down. So once prices go up, you're stuck with them, basically, right? That's what people are really unhappy about now, is because over the last 5 years, over this period of time, we had inflation spike up massively. And again, prices are not going to drop. The best we can do is slow them down. And so what people are really unhappy about is that prices are too freaking high right now. And that's the opposite of a depression or recession like some of you guys are yelling that we're in. Again, just because the economy isn't great doesn't mean we're in a recession or depression, right? It could be bad for a lot of different reasons. One of them is from too much spending, too strong of a labor market. If you listen to the Federal Reserve, They'll tell you why they're raising rates, and sometimes they're not always the most truthful about it, and that's normal. But again, people are really unhappy because of this period here between 2022 and 2024, what we're in now, where inflation spiked up to almost 9% and prices went up into an unsustainable level. And so because of that, if we start cutting rates too early, prices are going to get worse. You know, if we start cutting rates way too early and bringing interest rates down, what do you think that's going to do? That's going to contribute to way more spending, way more inflation, and prices are going to go up even more. And again, people are upset now because what's wrong with the market right now is not the labor market. The labor market's too strong. Too many people are working, probably because they got to work a ton to afford the crazy inflation spikes that we've had over the last 5 years, right? But that doesn't mean we're in a recession. It just means we're in the opposite of that. Too much spending has occurred and inflation has spiked up to an unsustainable level, right? And so now we either have to force ourselves, if we want prices to actually go back down, the economy actually has to get forced into a recession, into a depression, if they want prices to actually drop, which is usually not what the Fed's going to do. Most of the time, they're going to try to slow the economy down to a point in which inflation slows and we can kind of catch back up to it in inflation terms. That's kind of what we're in now. Anyways, I think a lot of people that yell, the world's ending, they don't really know what a recession or depression really means, and they're just kind of yelling buzzwords that they hear on the news. But again, a lot of them don't really understand. We're in the opposite of a recession or depression right now. But again, when I say that, it doesn't mean things are all rosy and fine and great. That's not what I'm saying. But again, a lot of people don't really know what these things actually are, or what it means, and stuff like that. So I hope that makes sense. I have to go over this once a day. But yeah. Yeah. Notice how yeah, well, bonds with the watch. Friday yield shot up 3.5%. Interesting. The 10-year yields are always my favorites. What is the 10-year symbol? TNX? Yeah, it's TNX. Yeah, 10-year yields up to 4.43%. Look at the 10-year. You're right. Yields did spike. Look at this. So we're at 4.4% for the 10-year. Interesting. Yeah, like, you notice how, like, again, I guess the point is, like, don't get so wrapped up in politics that you're one of those people that are just constantly screaming we're in a recession or depression without actually knowing what it means to say that and, like, what the economy's actually doing right now. Just because things aren't good does not mean we're in a recession or depression. It can mean we're too far to the other side, which is what we're currently in, right? And what this means, though, guys, is like another thing to understand about all of this, right, is that the longer the Fed keeps interest rates high, the more likely we are to enter a recession or depression, right? Because when the Federal Reserve is keeping interest rates high, businesses struggle, right? Like, they're discouraging spending, and that comes at a price for businesses. And so when the Federal Reserve is keeping interest rates high, if they do it for too long, I always describe it as like, it's like picking up pennies in front of a train track. If you do it for too long, eventually problems can occur from it, right? And so, yeah, we're currently in that period where we've kept interest rates a long time. So again, it's possible that in the coming years we do hit a recession or depression if we keep interest rates high for too long. But again, my bias is like, I think we should keep interest rates high and really combat inflation right now. Because if we don't, inflation's one of those things that has a domino effect. When it starts to rip, it's hard to slow it back down. And so we've had it rise a lot. People are really unhappy about that more than anything else. And so it's kind of one of those things where we can't really handle it, more of it right now, economics wise. We can't really handle more inflation. Like, we can't handle inflation spiking up to freaking 10% again, because then people think they're unhappy. Now, if that happens, they're going to be really, really freaking unhappy. And so even if we hit a recession or depression, maybe it makes prices go down some, but I think we should focus on prices. Uh, yeah. Hey, thanks for the donation. GameStop on Solana to the moon. Don't sleep. It follows the momentum of GameStop on the stock market. I don't know about that. Wake up, Dawn. Just always. I'm not telling anybody to buy anything, brother. I appreciate the donation, but y'all be safe. I'm looking at it right now, though. On CoinMarketCap. CoinMarketCap updated their charting. That's nice. Let's put a daily chart up. Yeah, I mean, it's spiking up a little bit. This is the crypto symbol they're talking about. Again, I'm definitely not telling anybody to buy anything, though. Yeah, Nvidia split is up there. I'm going to put GameStop back up. GameStop back up to almost 31s. Yeah, we're going to do a poll here. Let's do a poll. Alright guys, so I saw that Rhythmic was having problems again over the weekend. Alright, so it looks like they had trade evade issues fixed. Yeah, I don't know about the pay package. No idea. GameStop's up though. Let's see if it continues. Any other news with Roar and Kitty and them? Yeah, I like this music. It's kind of new. The vote is, we got the FOMC meeting. Honestly, it's a crazy busy week, dude. We got CPI, FOMC, PPI data. It's very busy, very stressful week for markets. Let's see what happens here. A lot of people are speculating on a rate cut. I think that's the best question we can give here today. Let's do a poll here. The poll is going to be, do we cut rates on Wednesday? Yeah, so again, do we cut rates on Wednesday, chat? I don't think we do. I don't think we should. Again, I think we should. I'm okay with keeping interest rates high for as long as we can. You know, I think that's the move. That's the right thing to do. But everybody's different. Yeah, GameStop, again, a lot of people, I was watching the Roaring Kitty stream. Yeah. Fed minutes should not be happening anymore. What? Yeah, again, I watched the Fed. I think it's very clear that the Fed is not. I mean, again, anything can happen. They could cut rates, right? Like, it doesn't mean anything. The Fed could cut rates, right? So nothing is 100% certainty. They certainly could cut rates. I don't think they're going to. I don't think they should, but they could. And so I'm not going to be. I'll be shocked if they do, to be honest. All right, chat. I'm looking at other news. All right, so Wall Street Journal's Tim Morose highlights that, quote, most sell-side economists and other professional Fed watchers now anticipate 1 or 2 rate cuts this year in either September or December. Yeah, and if we look at the actual probabilities of that here, I'll put this up on screen. Right, if you look at the actual probabilities of that here, let's look at the Fed potentials here. So again, the day after tomorrow, 0.6% chance of a rate cut. July, though, at the end of July, 91% chance of a pause. So it doesn't look like we're cutting rates until at least December. Even in December right now, though, I'm sorry, it doesn't look like we're cutting rates until at least September. Even in September, though, which is where it used to be biased, 51% are still expecting a pause in September, probably because of inflation, issues. Like payroll data came in high, unemployment's still low. So now people are expecting November cut. So now it switches to the majority of bets are on November for a rate cut. And I agree with that. I'm okay with that. The man who reads nothing at all is better educated than the man who reads nothing but the newspapers. 100%. I just think people are so, like, it's, again, again, I think I think people think I'm against them, right, politically. I'm not. Like, I just distrust both sides and recognize, I'm not going to spend my life arguing about politics. I'm just not. Like, that's not what I've ever wanted to do. I just think that's, people make it like such a deep part of their personality. I've never been about that. I'd like to talk about other cool stuff, Hey, what's up, Kimberly? Good morning. Deflation, incentive saving, and not spending cash gains. Yeah. Should I buy the stock now? It's split. What? Nvidia? I have no idea what you should do with Nvidia. No idea. It did split. Whether you want to buy it's completely up to you. I'm certainly not going to tell you to buy anything. Yeah, it look like rhythmic problems are going on again. Just for entertainment purposes, what do you think GameStop will hit? I have no idea, man. Again, it's not it. People think I'm not answering these questions because of liability concerns. I'm not answering these questions because nobody freaking knows what's gonna happen with these. Nobody knows. I certainly don't know what these are gonna do. I hope GameStop goes up. That's where my bias is. I want it to go up. I'm in it. I hope it and AMC goes up. I'm in both of those stocks. Where they go, nobody knows. Anybody that claims to know is just, on either side is just kind of yapping, to be honest. Yeah, so Rhythmic is down right now, Blaze. Yeah, but I don't think we're going to cut rates. In fact, the market... again, the market right now is not pricing in a rate cut. Like, watch. Like, look, here's AI, right? I could ask AI, will the Fed cut rates tomorrow or Wednesday? Give me an argument for or against a rate cut based off of historical data. Let's ask AI here. Let's have AI break it down. Yeah, Europe's cutting, Canada cut. Canada's not really the big one. Europe is more important. Argument for a rate cut. All right. U.S. economy has shown signs of slowing down, with certain sectors experiencing reduced activity. Lowering interest rates could stimulate borrowing and investment, potentially averting a deeper economic downturn. Historically, the Fed Reserve has cut rates in response to economic slowdowns to boost economic activity. Although inflation remains a concern, recent data suggests that price increases have begun to moderate. The Federal Reserve may consider a rate cut to support economic growth without significantly exacerbating inflation. The Fed's own projections indicate a slight decrease in core PCE to 2.6 for 2024, but they still see room for rate cuts this year. Financial markets are pricing in high probability 70% of a rate cut in June, according to CME Fed Watch tool. That is wrong. Wrong, market. We are not cutting rates in freaking June. Again, this is where AI gets it wrong. This is wrong. Argument against the rate cut. Recent inflation data. Recent inflation data has been higher than expected. Complicates the case for rate cuts. The consumer price index showed a significant rise driven by increases in essentially areas such as shelter and medical care. Historically, the Fed is cautious about rate cuts when inflation is not well contained. Labor market strength. The labor market remains robust with the unemployment rate steady at 4% and substantial job growth in various sectors. This is the reason, like people yelling we're in a recession and depression. Again, they don't really understand. You know, for those that yell we're in a recession or depression, I really think they should go to an economics class and understand what all this means, right? People, like, things are not great, so they just yell recession, but that's not what we're in. Again, the labor market's too strong. Unemployment's at 4%. Job growth is happening. And again, regardless of why it's happening, I do believe that job growth is happening because of like a higher need to work with prices being so freaking high. I think people need to work more to stay the same. And so, but regardless of why, it doesn't mean we're in a recession. You know, it just means that the real problem, again, as I said before, is inflation. Inflation's the problem. We've had prices rise so much in 5 years. It's not sustainable. It's not going to hold. You know. Yeah. In summary, while there are valid arguments on both sides, the decision will likely hinge on the Fed's assessment of recent economic data and inflation trends. Yeah, maybe recession. All right, again, Broadcom flying up. Right, I'm in 4.0 right now. Yeah, so again, here is AI. Here's here's AI. GDP growth rate. Although GDP growth rate is declining, it has remained positive. This suggests that while economic growth is slowing, the economy is not contracting yet. Unemployment rate is rising, which can be a sign of economic weakening. However, a rising unemployment rate alone does not confirm a recession. The inflation rate is increasing, which indicates rising prices. This could be due to supply-side constraints and demand pressures. Current status, based on the definition of a recession, which is 2 consecutive quarters of negative GDP growth, the data does not indicate that the economy is currently in a recession. The slowing GDP growth, rising unemployment, and increasing inflation suggest the economy is facing significant challenges. These conditions could lead to a recession if the GDP growth rate turns negative in the upcoming quarters. The economy is experiencing a slowdown but has not reached the point of a recession as per the technical definition. The trends indicate economic stress, but further data, especially on GDP growth in the coming quarters, will be crucial in determining it. Yeah, for sure, right? Hey, thanks, Kimberly. Appreciate it. Apex only offers futures trading. Yeah. GameStop and AMC bullish. I hope so. Oh, dude, I didn't get nearly enough sleep last night, man. I just didn't. All right, guys. So, Keanu Reeves once said, "I'm at the stage in life where I stay out of arguments. Even if you say 1 + 1 = 5, you're right. Have fun." Maybe I should just approach that port. Honestly, I did one of those personality assessments using the big. I think it's the Big 5 model. I also did one of the more legit IQ tests. Over the weekend, just kind of for fun. So a lot of the online IQ tests are complete nonsense, right? But I used AI to figure out which ones are probably legit. I took those. I also took one of the Big 5 personality tests. One of the interesting things that it said. This is what the personality. I'm not going to go into the IQ score because I'm not trying to brag. But the personality test was interesting. It said I was high in intellect, high in disagreeableness. Like, which might seem like a bad thing. Like, people interpret that as a bad thing, being high in disagreeableness. But I guess what it said about that was that most smart people are high in disagreeableness, believe it or not. I'm not sure why. But it was it said that I'm high in creativity, low in sensitivity is what it said. My wife would honestly absolutely agree with this. I'm not the most sensitive person I should be sometimes. But high in disagreeableness, low in sensitivity. I have to pull it up and figure out all the other stuff. But it was interesting. What will GameStop do? I don't know. Oh, my Myers-Briggs? My Myers-Briggs personality test. I'm a debater personality type. I am an ENTP, I feel like is what I am. Let me see. I think it's ENTP is what I am if we're using the Myers-Briggs. Yeah, I'm an ENTP, a debater. Honestly, I'm torn on these, though. To be completely honest, I'm honestly genuinely torn on these because I think sometimes they're just telling you what you want to hear, right? It says, and y'all can tell me if this is true or not. I'd like to believe this is true. But again, to be honest, some of it gives me like horoscope vibes, right? Where if you don't know what I mean, like sometimes these horoscopes, if you actually read them, they'll be like, oh, this person deeply cares about their friends and family and they don't trust easy. You got to earn their trust. They're very caring and with people they care about, they're very loving, Like everybody's going to be like, yeah, that's me. They're super smart, and they think things clear through and they're very smart. They're quick-witted. Like, everybody's going to be like, yeah, that's me, right? They're just telling you what you want to hear to a certain extent. Horoscopes, that is. It's like everybody wants to believe, like, oh, they're good to their friends. They love their friends. Freaking wow. Everybody's going to be like, yeah, that's me. I love my friends. They're just telling you what you want to hear to a certain extent. At the same time, though, the Myers-Briggs personality test, I think they use the Big 5 now or whatever. It's either the Big 3 or the Big 5. I might be thinking of a basketball league, too. Let me see. What is the standard personality tests? Some people use the Myers-Briggs. The Big 5 is what it is. Yeah, I took the Big 5 over the weekend. Okay, so I am an ENTP, which says is a personality type with extroverted, intuitive, and prospecting traits. They tend to be bold and creative, deconstructing and rebuilding ideas with great mental agility. They pursue their goals vigorously despite any resistance they might encounter. Quick-witted and audacious, people with ENTP personality aren't afraid to disagree with people. In fact, they're not afraid to disagree with pretty much anything or anyone. Few things light up these personalities more than a bit of verbal sparring, and if the conversation veers controversial, so much better. It would be a mistake, though, to think ENTPs is disagreeable or mean-spirited. Instead, people with this type are knowledgeable and curious with a playful sense of humor, and they can be incredibly entertaining. They simply have an offbeat, contrarian idea of fun, one that involves a healthy dose of spirited debate. They're the ultimate devil's advocates, thriving on the process of shredding people's arguments to pieces. Sometimes they even rebel against their own beliefs by arguing the opposite viewpoint just to see how the world looks from the other side. So those are ENTPs, right? That's what I got whenever I took the Myers-Briggs personality test. And so I guess I could kind of see it if it's true, but I think a lot of people don't use the Myers-Briggs anymore. And so I don't know for sure whether to believe this or not. I don't know if I trust that. But, you know. Yeah. Yeah. Well, that was interesting to listen to. Hey, I love my friends. Yeah, I'm mostly out, I'm mostly talking about horoscopes. Like, you'll see people that base their entire personality on a horoscope, right? Like, oh, you know, I'm an Aquarius, right? So I could base everything off of an Aquarius' personality. But again, a lot of these tests are just telling you, specifically horoscopes, not personality tests. I think a lot of these personality tests are legit and valid. But horoscopes, on the other hand, they're just telling people what they want to hear. Like, look, I could type in Aquarius. Independent, creative, progressive, humanitarian, rational, sensitive, upfront. See, I'm not sensitive, in fact. I'm the opposite of sensitive. But it's never definitive, right? But everybody wants to believe they're creative, independent, humanitarian, and rational. Everybody in the world is going to be like, yeah, that's me, right? So that's how people, like, yeah. It's hard to, I have to be kind of delicate with this, but I think some of these horoscopes, they're just kind of tricking people into believing things because they want to believe it. Confirmation bias, is the easiest way to put what I'm trying to say. Confirmation bias. People want to believe that they're creative. They want to believe they love their family and friends. They want to believe that they're rational. And so telling people that based off of the month that they were born, you know, I don't know. Myers-Briggs is legit. Yeah, I mean, based off of the debater, the ENTP, which is what I have, that sounds like me. And again, sometimes it can cause problems being that way. But, yeah, if somebody asks me what's your horoscope, I'm just gonna be like, look. I think this appeals to people who are looking for a guide. Like, they want a guide in life. It's easier than, you know. Again, just looking at mine, though, it's wrong. Like, again, I took one of the Big 5 personality tests. It said I was high in disagreeableness. It said I was insensitive and high in disagreeableness. Not a shock. Honestly, my wife would agree with that one. But again, it says Aquarians may have a sensitive side, you know. Not really. Like, I might have cried, maybe. I'm gonna say like less than 10 times in the last 14 years since I've been with my wife. She might have seen me cry less than 6 times in the last 14 years. And so I'm not a big crier. I'm not super sensitive in that regard. If anything, the problems I face are the opposite of that, where I'm not sensitive enough, and I'm too blunt sometimes with people I care about. Right, exactly, Detra, 100%. Yeah, believe it in horoscopes. Definitely top 3 horoscope analyzers in the world right now, guys. Definitely top 3. Yeah, y'all hit that like button, chat. Do it now. You know you want to. All right, guys, so GameStop at $30 a share. Nvidia down to 120. SPY up to 534s. Let's see if it holds. We're waiting here. Not much going on this morning outside of this. We are flat in our portfolio today in equities. Haven't day traded much. Here we go. We just broke 100 likes. Thanks so much, chat. I appreciate it. Are you thinking copper not for Nvidia? I don't know. I'm already in Nvidia. I think we're going to have to wait until the opening bell to see some movement. Is the music too loud? You can't trade the SPY directly, but you can trade what the SPY tracks, which is the S&P futures contract. You know, so you can't trade the SPY directly. Let me show you. So there's the SPY on the left. I can't trade it directly, but what I can trade is the E-mini futures contract. So if I zoom in on both of these, you'll notice it's the exact same price action. Different price, but the same price action. So like, look, this is the same. Right, big pullback, bounce, big pullback. Let me zoom in a little bit so you can see it. Big pullback, bounce. Actually more liquidity in futures than there are on the SPY. So you can kind of see the moves a little bit cleaner, but it's the same price action. Look at the big down wick, down wick here, same price action, bounce, bounce, same price action, just different price. So I can trade what the SPY tracks in futures. Same thing with the Q, like the NASDAQ is what the QQQ tracks, right? So here's the NASDAQ 100 futures contract, here's the QQQ. Again, it's the same thing. Look, down wick, bounce, consolidation, it's the same thing. Right, Detra. So here's Nvidia, get Nvidia 120s. There's the NASDAQ. NASDAQ at 19K. Yeah, I'm reading this personality test. It says ENTPs are known for their rebellious streak. For this personality type, no belief is too sacred to be questioned, no idea is too fundamental to be scrutinized, and no rule is too important to be broken or at least thoroughly tested. This may make ENTP personalities seem overly cavalier or defiant, but at their core, their innate tendency to test boundaries has more to do with their desire for innovation and change. As they see it, most people are too ready to do as they're told and blindly conform to social norms, pressures, and standards. ENTP personalities enjoy the mental exercise of questioning the prevailing mode of thought, and they take a certain pleasure in uncovering the value of underdogs and outliers. Their active mind can't help but rethink things that everyone else takes for granted and pushes them in new, clever directions. While ENTPs love to brainstorm and think big, these personality types tend to avoid getting caught doing the grunt work of implementing their ideas, and they sometimes have a hard time sticking to their goals. To some extent, this makes sense. They have far too many thoughts and suggestions to keep track of them all, let alone turn them into reality. But unless they develop their willingness to identify and actually follow through on their priorities, they may seem to struggle to harness their full potential. There's a cost for contrarianism. I mean, look, I don't know. I don't think any of these are perfect. But it does sound similar to how I am, you know.
I have ADHD, so I'm kind of all over the place sometimes. Right, no, honestly, that's what I'm saying, AK, is that the Myers-Briggs seems to me like some of these horoscope-like things where of course everybody wants to believe they're quick-witted and rebellious and smart, right? Like everybody wants to believe that, and so I think people are more likely to believe them with confirmation bias because of that. Just finished Yellowstone. I like the older prequels of Yellowstone. I like the prequels in Yellowstone. I like 1923 is really good. Who knows when the new one's gonna come out? Yeah. I turned it down a little bit, so people are mad about the music. I turned it down. Do I need to turn it down more? I know it's a little bit faster paced. Look, I turned it down even a little bit more. That should be good. Right, put some negative things. I'm for that. Let me see. Strengths and weaknesses. Okay, let me find my weaknesses. Argumentative. Accurate. Definitely argumentative. Insensitive. Intolerant. Difficulty focusing. Dislikes practicality. I agree with most of those. These are true. I can be argumentative, insensitive, intolerant. I don't know if I agree with that one, but can find it difficult to focus. That's definitely true. Dislikes practicality. Yeah. I mean, most of these weaknesses are true for me. But again, these aren't perfect. Again, I think they use the big five personality test now is what I think they use. Anyways, guys, so the NASDAQ just went slightly green, so it's popping up a little bit. Nvidia at 120.50s here, so it's trying to move too. Any other individual stocks moving that I'm missing here? I'm looking at stock news. Citi has launched Citi real-time funding for corporate clients and expanding its real-time treasury suite. Again, today and tomorrow are quiet. The rest of the week's incredibly packed and busy here. Yeah, so Tuesday, I don't think we have anything tomorrow either. 10-year bond auction. Wednesday's when the busy day starts. Wednesday, we're going to be busy all freaking day. But tomorrow's boring. I don't think we have any earnings, too. Let me check. Earnings season is basically done. Academy Sports drops tomorrow morning. Oracle drops Tuesday evening, but it's not big enough, I think, for me to cover either. I've watched most of Yellowstone. I think I've watched 4 out of the 5 seasons of regular Yellowstone. They're not focusing. Yeah, dude, I'm a terrible focuser. Bro, honestly, I got 4 monitors. And so, yeah, you better believe top 3 worst focusers in the world right now. Nothing life-changing, but money is money, and they've taught me the best lesson ever: buy and hold. 100%, dude. Honestly, that's the biggest thing people miss out on the most. I think day traders have a specific mindset, and I think it's really hard for them to trust long-term gains. But I think long-term gains are the biggest statistical edge you have in markets. I've been stuck watching The Resident. Yeah, so I have there's a doctor who's like who's in our jiu-jitsu class. So he's like an ER doc. And my wife loves Scrubs. Like my family watches Scrubs, the show Scrubs, pretty regularly. And so I was talking to him about doctor shows, and he said we should watch The Resident. He said he's been on The Resident lately. He said it's pretty good. CRWD breaking through it like CrowdStrike. Yeah, I'm watching CrowdStrike as well. CrowdStrike with a big gap up here. Like here's CrowdStrike, CRWD. Company's gonna join the S&P CRWD. CrowdStrike, it's a cybersecurity company. Yeah, honestly, Scrubs is my wife and I's comfort show. Actually, I like The Office more than Scrubs. The Office is my comfort show, just because I've seen every episode. And so if I want to go to sleep, then I put The Office on. But my wife also loves Scrubs, so I love Scrubs too. I've seen it all multiple times. I had a friend that his Xbox gamer tag was Turkleton growing up. Yeah, so my family is now on Star Wars. So we are on Star Wars now. My whole family and I are watching Star Wars. We watched the prequels. We're letting my son watch the Star Wars movies in order. So we're letting him start off at the prequels, watch the originals, and then go to the newer trilogy. We're probably gonna skip. Rogue One, even though Rogue One's probably my favorite. CPI is Wednesday ahead of the Fed meeting. Yeah, Office Space, great movie. Love Office Space. Hilarious movie. So yes, CrowdStrike, again, you can see it gapping up. It was approved for the S&P 500, so it's joining the S&P. Anything else moving today? Yeah, so CPI expected Wednesday. CPI is expected at 3.4% year over year. Month to month, it's expecting a decrease from 0.3 to 0.1%. Core CPI expected at 3.5% on the year and 3.3% on the month. So decrease is mostly all the way around. If we come in as expected, that is for CPI. Yeah, you're probably talking about the original Star Wars prequels. Yeah. Yeah, all good, Claudine. Yeah, today's no CPI today. CPI is Wednesday, along with the Fed meeting is Wednesday. Wednesday's going to be incredibly busy. so here's the SPY. Here's Walmart. I'm looking for stocks that are down. Let me have AI tell me what stocks I should buy the dip. I'm looking for large cap, blue chip stocks. Stocks with low PE ratios that have dropped. What's the good drop? 20% or more in the last 6 months. List those below now. All right, let's figure out some of these stocks that fit these parameters so I can see if we got any discounts to buy. Discover Financial. So let's take a look at some of these. I'm going to put a daily chart up because I think a daily chart is probably the best. DFS, not down enough. HP. I don't know anything about HP. HPQ? It's up too much. Altria. I don't know anything about Altria. It's up too much. STLA. What is STLA? Stellantis. It's a global automaker. Make a list of 10. Cisco looks okay off support. Yeah, but they have earnings, don't they? I don't know, maybe it's Oracle has earnings. Cisco is down a lot. They're down so much though. Why are Cisco so weak, I guess, is the question. All right, let's look at WFC. See, WFC is down a couple percent. Intel's still down a lot too. 3M. Boeing. Yeah, these are better. Goldman Sachs. But see, Goldman Sachs is still up a lot. Wells Fargo, still up a lot as well. Wells Fargo's dipping, but I don't trust buying up any bank stocks right now. Caterpillar, I do like Caterpillar stock. It's just up a lot already, though. That's the problem. Johnson & Johnson. I think people lost trust in them, so I'm not going to buy them either. Disney's down to $100, so I could buy Disney. PayPal. See, PayPal's back up some. Verizon. See, Verizon's still strong on the year. Only list companies that are down over the last 52 weeks. No green. List new companies. Baba. Yeah, I mean, Intel's down a lot. I'm already in Intel. So I did buy Intel on the dip. And it's just kind of consolidating. But I am in Intel. And I'm pretty much flat on Intel right now. So, Nvidia will turn. Yeah, GameStop at 2960s. Yeah, I think my AI is frozen. Also, Chad, if you haven't already, check out Apex. Apex is a funded account program in futures. If you want to day trade with me, I day trade live every weekday morning right here on YouTube. I don't sell a course. I don't sell a service. I don't claim to be an expert. But if you want to learn to day trade, check out one of my sponsors. One of my sponsors is a company called Apex. Again, most day traders lose money. You know, I'll tell you the story of when I first got started trading. When I first got started trading, I lost thousands of dollars within a few weeks. Right? Almost all day traders lose. Understand CFTC 4.41, hypothetical or simulated performance have limitations. These are sponsors of mine. I can't guarantee anything. Always make your own assessment, trade responsibly. But yeah, so if you want to learn to day trade, when I first got started day trading, I lost thousands in a couple weeks. Most day traders lose. So the truth is that nobody wants to look at objectively is that if you put up $4,000 in the beginning, you're probably going to lose that $4,000, right? Almost all day traders lose money, and you don't have to lose like that in day trading. Instead, you can get started for noticeably less, still face risk, still learn how to trade under pressure, but if you lose, it's noticeably less losses usually, and you can still take withdrawals and make money from it. This is called a funded account program in futures. In the futures market, they give you a demo, and they test your skill with the demo account. The base one's $25K. If you pass it, you get $25K in funding with a 90% split. To pass it, you just got to make $1,500 in profit without losing $1,500 first and following their rules. Right now, you can get the $250K challenge, where if you pass it, you get $250K in funding with a 90% split. And again, so if you look at this here, for the time being, you can get this one for $16 roughly before tax, $16. So again, if you pass this, you get $250K in funding with a 90% split. So again, if you make 20K once you're funded, you get to keep 18, which is 90%. They keep 2 since they're funding you that money. So you're keeping most of your profits if you're past this challenge anyway. And if you fail this challenge, you probably would have lost more money if you put the money up yourself, right? Instead of risking $3,000, $4,000, $5,000, this one is only $18 right now. You're still risking something, but you're not taking the full amount of risk for thousands of dollars like most new day traders have to do. Again, there's no PDT in futures. In futures, you can't trade individual stocks, but you can trade essentially the QQQ price action. Like here's the NASDAQ 100 futures contract on the right side, and then here's the QQQ on the right side. So here's the NASDAQ futures contract in the middle, and here's the QQQ on the right. So you can see it's the same price action, but in futures, I can day trade this one here, which actually has better liquidity than the Q itself. It's actually what the Q tracks. No PDT rule. I can day trade short, buy market, sell market. Patterns are very similar to blue chip stocks, but there's just no PDT rule. I can do it in futures without worrying about the PDT. If you wanted to do the same thing in stocks, you need 25K in a margin account, really, to do so freely. So again, if you want to check out the great way to use this, I think the sale ends tomorrow. So again, for the time being, you get 90% off. You get the 250K challenge for only $16. It's about $18 after tax, and I think it ends tomorrow. And so if you haven't already, there's the link. Check it out. Great way to help support the channel. They are a sponsor of mine. And so they are a sponsor of mine, so I'm biased, of course, because they pay me money. But yeah, you should be able to sign up through your LLC. Mine is through my LLC as well. Yeah, so again, NASDAQ, very flat. I think, again, if I do have a strategy today, chat, it's going to be attacking choppy behavior. Unless we get a blue chip stock that just goes crazy. Sorry, I'm kind of yelling at AI. It keeps listing the same 10 stocks over and over and over again. So I got to yell at it. Hey, you have listed the same 10 stocks over and over again. List new stocks, please. All right, Eli Lilly, low PE, dropped over the last two weeks. Starbucks, Exxon, McDonald's, Nvidia, American Tower Company, Clorox. These are a little bit more new. Where's Exxon at right now? Exxon is not down over the last 52 weeks. It is pulling back though, so I don't mind this right now. Where's oil at? All right, so here's oil. Oil spiked today. Is it time to buy oil, guys? I am using Chat GPT 4.0. List more. I'm trying to see if I want to buy anything right now, but the market's been breaking highs, and so I don't really like buying up when we're this extended. I like buying pullbacks instead. Oil's tied to, yeah, I know oil is tied to macroeconomic stuff, and so that's the only reason I'm not buying oil right now. Again, we're pretty much flat in equities. Oh my gosh, dude. Stop. Same companies. Again, before sending me results back, review what you are about to send me and confirm you have not mentioned the stock in the last messages sent. Thanks. Thank you. Caterpillar. I'll buy Caterpillar if it gets better. Let's see. It's down. It might not be down enough. QCOM, Chevron. QCOM's up a lot. IBM. But it's IBM though. AT&T. Chevron. Yeah, I'm trying to look at stocks that are pulling back. Amex. Up too much. CVS. I think I'm in CVS right now, believe it or not. I think I'm green on it too. Let me check. Yeah, so I'm in CVS. I'm green on it too. So we already bought it. The thing about Intel is I might add some more back to Intel, I think, here. Yeah, I'm going to go ahead and add some more to Intel. All right, we're in 75 shares of Intel here. Yeah, I know Rhythmic is having problems on Apex. Rhythmic's having problems everywhere, not just Apex. Home Depot is another one that I like. I like Home Depot stock, but it's got to pull back enough. I'll buy a little bit more of Home Depot as well. Alright, so we're in Home Depot. Probably just gonna stay there. Apple is ripping up strong. When's next earnings season start? Next earnings season is gonna be a big influence. So we can always check by looking at when JP Morgan. So next earnings season starts in about a month. So we got about a month until earnings season starts. Yeah, I heard he had major drop. Caterpillar does well. Yeah, I need something that's pulling back a little bit more, to be honest. Caterpillar's still having a really good year. Caterpillar's, even at its current price, right? Like percentage-wise for Caterpillar, it's the only reason I'm not buying it right now. Caterpillar's up from 223s all the way up to 324s. Right, or 329s. So yeah, Caterpillar is up 47.5%, basically 50% on the year. So it's really hard to get me to buy a stock that's up 50% on the year already. You know, my trading strategy typically does the opposite, where I look for beat up stocks on the downside and buy those. Dell, I think Dell's same thing, man. I think Dell's up too much on the year for me to buy it. Yeah, Dell is up from $47 to $129. right? So Dell is up 175% for Dell. It's just up way too much right now, brother. Way too much right now. So yeah, Dell's up 175%. I'm just not buying that. Way too high. I need pullbacks to buy up anything major, and so you know. Yeah, I mean, Caterpillar did pull back a lot, but it's still up too much. Look at GameStop. GameStop's still coming back down. Here's oil on the right. We're going to pull up the Q. Let me see if... yeah, I'm trying to find... Yeah, sorry, I'm looking at kind of in the background. All right, guys. So, again, market opens up in about 50 minutes or so. 50 minutes. We're still waiting. We got oil, the Q, GameStop. GameStop. Let's see if GameStop can just hold green on the day.
Hmm. All right, guys. So the Q's dipping all the way down to 462. Oil is at 73.60s. Dell's pulling back some over the last couple weeks, but it's still not enough for me to want to buy it. Yeah, I mean, again, I'm looking at our polls. 59% think no. 26% of people think yes. I think it's confirmation bias. I think they want a cut to happen, and so they just kind of, they hire Uber. I already bought Uber, so again, I'm actually in Uber right now. We bought it after earnings, and we're up. Our average price is 65s, so we're actually up at Uber already. What do you think about buying takeaway? Give me the symbol. I'll take a look at it. Again, list me some symbols. I'm looking for blue chip stocks that are down on the year. Chad, list me some symbols. I'll take a look. So again, list me some symbols. I'll take a look. So can you buy watches on Amazon? I'm gonna take a look. Because again, I like Amazon's refund policy. But how does Amazon make sure watches are real? Let's see. Oh, it's nice. All right, guys. GameStop at 29s here, chat. 29s. Is buying a watch from Amazon reliable, though? I don't think so. I'm just not going to do it. Too much risk. Yeah, there ain't no way I'm going to do it. All right, chat. Anything else that looks good today? I don't. Yeah,
Here, we asked people to list the stocks. Let's take a look at what they said. Shopify, Snowflake. Yeah, I know Shopify. Shopify's all right. It is down enough to where it's basically flat on the year. That's a contender. I'm already in it, believe it or not. So I'm actually in Shopify already, although I'm flat. I'm going to start listing some of these stocks. So I'm already in Shopify, but I don't hate it, right? Adobe, I don't trust at all because of the influence of AI. So I really don't trust Adobe at all. It's down so much, but maybe they're going to come out with some AI technology. I think they'd be really smart too. And if they do, then, you know, maybe it's okay. How about Dow Chemicals? Yeah, Dow. Yeah, I don't know. Dow, not quite down enough on the year for me personally. It's still great on the year. Anything else? I don't hate some of these, but again, remember, these need to be blue chip stocks. I'm not going to buy up anything that's not a blue chip stock. You know, if it's blue chip, I'll buy it. If it's not, I'm not going to buy it. Snowflake, I'm actually in SNOW already as well. So we're actually down on it. But it is one that we might consider adding to now. SNOW. Just really volatile, down a ton. Hey, I'll be right back, guys. I'm going to go to bathroom break. We're going to do bathroom break Jeopardy. What month does the Fed cut rates this year? Again, what month does the Fed cut rates this year? Time for bathroom break Jeopardy. All right, we'll be back, guys. Let me know while we're gone. What month does the Fed cut rates this year? Listen in chat. Let me know how you feel. Again, I'll be back in like a minute or two. All right, guys, so we are back here. Let's see what the bathroom break Jeopardy answers. Broadcom, AVGO. AVGO is up so much. TSM, maybe. This year, September. Just before elections. September. Can someone explain to me why Nvidia is down? I'm strictly beginner, and it's the first time that happened in my wallet. It was the biggest investment in my wallet. So Stan, so yeah, Stan, Nvidia is basically flat on the day. It's slightly down, but Nvidia has not turned in price. Like, this is, if you look up a daily chart, which is a long-term chart, Nvidia has only gone up on the year, right? What Nvidia is 10 times less the price because it did what's called a split. When the price of a stock gets too high, companies will then split the shares up into smaller chunks, right? So for every person that had 1 share of Nvidia, you now have 10 shares, and Nvidia is 10 times smaller. So it equals out, it evens out, right? You're holding the same amount of equity that you were before. You just, if you had 1 share, you have 10 times more shares now. So instead of having 1 share worth $1,200, you have 10 shares worth $120. So it's even in that regard, right? It's called a stock split. That's what happened over the weekend, is that Nvidia stock split. They split the shares up into 10 pieces, and now for every 1 share you held of Nvidia, you now have 10 shares. That's basically what went down. That's why Nvidia is where it's at now. Here's Nvidia. You know, Nvidia's at 120s. Yeah, they cut the price into more tradable pieces. So no worries to have about that. Well, yeah, it's not like you lost 90% of your value here, Stan. Like, your equity should roughly be the same. I can't tell you what your specific position looks like, but the market cap of Nvidia stayed roughly the same, like, not including the small fluctuations in price that we have overnight. Right, Nvidia is not down very much though. Here's the previous closing price. Here's Nvidia. So Nvidia is down about 50 cents a share. It looks like roughly 50 cents a share. So it's not a huge, crazy drop. You know, it's down less than 1% overnight. All right, guys. What do you think of watch lending? Well, interest rates are still pretty high. People made bank on puts. Nobody made any money except for a small, less than a percentage drop overnight. It's not like, again, when I was a very rookie trader, I remember I had a put option on a stock, right? And it did a stock split, right? Yeah. Oh, I think I had a call option on a stock, and it did a reverse stock split. And so, like, being the rookie trader that I was, I thought that I had just like 20x'd my investment. I got all excited. I didn't know I could just sell. I thought I would have to exercise the options. I just didn't know anything about trading, right? To a point where I thought a reverse split or a split would actually be like, if I was holding a reverse split and it was a 20-to-1 reverse split, I thought I was 20xing my position. Same thing with the put option, right? If you're holding a put option on Nvidia, it's not like you just 10x'd your money. You know, again, that comes from a fundamental misunderstanding about what a split is. Instead, you have an equal percentage of equity in the trades that you had, right? So it's not like people with put options overnight just 10x their money. If that was the case, that'd be the easiest 10x anybody would have. All right, chat.
Yeah, so let me know if you like the music today. It's kind of a newer. All right, so Nvidia dipping down to 120s. It's still dropping. This seems to be a major support level right here. We got about 30 minutes. All right, guys. Nvidia testing that 120 support level. We're gonna slow down. Yeah, again, Quant Tower's down. Nice spa music. I like the vibe, relaxing morning music. Hey, we're trying. All right, so again, we did break under. Look at Nvidia and dump under. So I might start to day trade here, chat. So we're gonna put up some stuff and start to day trade, just because I think we got some easy momentum to play with. Again, we're on a Trade Evade account. We've already made some money on this account. We're getting pretty close to putting in a withdrawal. Again, we've been trading on Trade Evade. I know Rhythmic has some issues here. So yeah, we're up about 3 grand today in this account. I know Rhythmic has some issues, and so just be careful if you're trading on Rhythmic today. We'll put up 2 charts here, GameStop and Nvidia, and we'll see if we get some good stuff.
All right, so we did get a little pop. Do I want to short this on Nvidia? I think I'm going to short the bounce here, day trading. And again, I'm day trading on Apex's funded account program. In this, you can look. I'm going to short a little pop. Maybe add a little bit to this position. Well, you're like one contract here, but I'm going to. We got to be careful for the DCA rule. And again, we're trading on Apex's funded account program. They give you a demo. They test your skill with the demo account first. If you can pass the test on a demo account, then they fund you between 25K up to 300K with a 90% split. We're going to add a little bit more. And so again, the split is similar to putting the money up yourself. This is what a lot of people got to realize. You're still risking something, but it's noticeably less than risking thousands of dollars trying to day trade yourself, right? So if you don't pass these tests, you're going to lose more money putting the money up yourself usually, right? And there's no PDT in futures. The patterns are very similar to blue chip stocks, but there's no PDT rule. There's limited risk in the funded account program. You could still lose money, but it's nothing compared to the risk that you're taking putting up $4,000 or $5,000 trying to day trade that for your first account, even in futures, right? So limit your risk, try a funded account program. You still have some pressure. It's not the full extent of a live account. All right, we're going to go ahead and add to this. It's not the full extent of a live account, but it's a lot cheaper. They give you a demo. The base one's 25K if you pass it. If you make 1,500 without losing 1,500 first, they fund you 25K with a 90% split. You can take that and have a 90% split once you're funded. If you fail, you're only out what you pay for it at 25, 30 bucks. If you use my link and coupon code BT. You can also, until tomorrow, get the 250K challenge for $16, right? So if you pass it, you get 250K in funding with a 90% split. So check it out right there. There's the link. Great way to help support the channel. Although, again, they are a sponsor. I'm biased. They pay me money, so I'm biased, of course. But if you want to check it out, there's the link in chat. You can use coupon code BT, beginner trading. All right, so we're up a little bit. We're going to add some more. We got 4 contracts now. There we go. Take a little piece of this off here. Just lock it in. We can be a little bit more loose on this now. We took half of the position off. So we're going to take the half off there. We're going to lock that in. We'll go ahead and cut it. So yeah, just a little $20 gain. Yeah, I mean, Jay, listen, it's not helpful to, I appreciate, you being a member of the community, but it's not helpful because everybody's different. Like, I'm attacking that bottom range. So again, if you don't know what I mean here, here's the trend we're currently in, right? I am just attacking this bottom range, scalping, building up a cushion. I'm not looking for, the point is, I'm not looking for a huge breakdown right here. Like, I'm not. I am shorting this range, shorting this, looking for a retracement back to the bottom of the range where I cover, right? I'm not looking for a huge breakdown right there. Either way, though, regardless of whether you agree or disagree with my trades, it's not helpful. I don't know how many times people have told me, hey, you're buying it at the wrong spot or you're selling it at the wrong spot, and then it just continues in my direction. And then it's just kind of like crickets. It's silence, right? And again, sometimes they're right, but regardless of whether they're right or wrong, it's just not helpful. You got to just let me trade my system. Again, in this account, we built up thousands of dollars in profit. And so, I'm just going to keep trading how I was trading. Yeah, I don't know if we're going to get rate cuts anytime soon. I don't think we can. Or I don't think we're going to get rate cuts today. At least I hope we don't. Or this week, at least I hope we don't. But we could. I don't think it's super high probability, but it's possible, Eli Lilly. I don't know enough about Lilly to say I like it or not. I know on a yearly chart they are up almost 100%. So I know they're up way too much for me to buy them up here. Nvidia has dipped down under that big 120 support level we talked about. Look at that range drop. So just be smart, guys. Be careful. Market trying to double bottom. Yeah, I mean, if you look at, Nvidia broke under a major support level. That's what's dragging the market down here. But again, I'm gonna attack choppiness today. Is probably what I'm gonna attack. So, like, I'm gonna look for flat action just because it's the Fed rate cut week, CPI week. I'm assuming that most things are gonna stay choppy and neutral leading into that. Yeah, Ozempic definitely helping them. But again, even with that said, they're still up just too much for me. I just don't feel like buying them. They're up too much. Yeah, all good, Jay. I understand. All right, so again, we are breaking down here. Again, a lot of this is due to Nvidia and weakness in tech. Shop looks good for the monthly long. Yeah, Shopify is down a lot. They've already kind of started their bounce back though, right? So there's Shopify. I'm already in Shopify, but they have had 1, 2, 3, 4, 5, 6, 7, 8, 9 green days in a row. You know, they dropped from earnings and now they have 9 green days in a row, and I'm already in it. So I'm just going to sit on that one and let it work. You know. Yeah. So again, we'll see. Are you in Disney? No, but I'm thinking about buying Disney. It's pulled back enough to where I'm thinking about buying it, right? But again, I might start small here and buy a little bit right now. But I've got a lot of room, I think. Yeah, I'll buy up a little bit. I've thought about it. It's pulled back a lot. It's at $100 a share. You know, it got up to 120s, and it's Disney. They own freaking everything. And I know the last time I bought Disney, it brought the haters out. And, like, I'm not a... Look, I just buy what I think is valuable, you know? Yeah, I'm not saying it's going to go up. I hope it does. I'm just kind of sitting tight waiting. We made a little bit day trading here. We got a little bounce back. Again, my plan is to attack choppiness today, though. I really am like looking to attack choppiness. So I'll actually buy this back. We'll start small. We'll add a little bit more. We'll take 2 contracts off the get-go here. Again, because the plan is to attack chop. And I think the market's going to be choppy leading into Wednesday, CPI, Fed, FOMC meeting, stuff like that. I think leading into that, the market might be choppy. I think I have a small cushion on the day. I could probably get into a small size here and see if we get a pop. But again, market opens up in about 20 minutes. Fed changed the date of CPI to June 12th, 8:30 before the Fed meeting announcement. I heard, does this mean they want to check this data before they potentially cut? No. I mean, when did they change? I mean, CPI has also always been scheduled for Wednesday. It always comes out at 8:30 and never comes out after 8:30. Like the CPI drops it's a monthly report, brother. It's a monthly report on inflation data, right? So CPI comes out every time it drops. It's at 8:30 Eastern Standard Time. You know, it's been CPI has always been in between the 8th and the 15th of the month. It's sometime between the 8th and the 15th of the month. It has been like that for the last year plus. Okay, so yeah, maybe they moved it, but no. So the CPI data is not going to influence it at all. If they did move it from the 15th to the 12th, it doesn't matter because it's like they're not going to change. By the morning of the 12th, they've already made their decision. Right, so by the morning of the 12th, they've already made their decision. They're not going to change their decision same day. It's just not something they do, you know. Yeah, they already know what the CPI is as well, right? Like, none of that matters. All right, so we are getting a bounce a little bit. We got 2 contracts, though. I'm just going to let this sit and see if we get a much broader bounce, even though I think Nvidia could start to turn on us. I saw this article claiming this. Yeah, I mean, one thing that you'll realize pretty quickly is that people sensationalize every Fed meeting. I don't know how many people are telling me the market's going to crash ahead of the FOMC meeting literally every time. We're going to go ahead and take some profit here and lock it in and then hold 1 contract, maybe add back to it on a dip. But I don't know how many people have told me that the market's going to crash ahead of big events. Very rarely does that ever happen. But every major FOMC meeting, CPI report, Fed minutes report, earnings report, people say the market's going to crash. It's the same people that were here earlier talking about everything's doom and gloom, but they don't really watch markets enough to really understand what's going on. Most of the time, it's their first time tuning in, and it's confirmation bias. Like, they want to believe this is going to happen, so they overestimate the likelihood of it. So yeah, I mean, again, we got a little bit of a gain here. We're gonna buy this back. You know, buy this dip. See what happens though. It could be choppiness. I heard you say this every FOMC meeting. Yeah, because this is really what happens, right? Like this is typically what happens. We're gonna add some more here. Typically, every major FOMC meeting, earnings, CPI, somebody's in the chat acting like the market's going to crash, even though they've been wrong 5 times in a row. You know, they either do that, they either bet the market's going to crash, or they say that the decision is going to be like wildly outside of what's expected in terms of probabilities. So a lot of the times, like an example is this week, they'll say, oh, the Fed's going to cut rates, even though a rate cut right now, if you look at the actual probabilities of it, is very, very unlikely here. So again, I see I'm losing on this position, but yeah, a rate cut right now is 0.6%. Only 0.6% of people think we're going to cut rates day after tomorrow. And so it's just super, super unlikely. All right, guys, so we are down now on this position. Again, Nvidia turning is what's going on. GameStop starting to bounce back up though, but you know, we'll let this test the support. I don't mind letting it sit there. We had a 10% swing last Fed meeting. Well, there's always volatility from the Fed meetings, but like, look, we could test this pretty easily. All right, I'm gonna get ready to cut this. I'll let it test the bottom here, but like an example of this is watch. So let's go to FOMC calendar. So here's the Fed meetings, right? The historical Fed meetings. We could take a look at this and see what they really look like. All right, so let's take a look at the last 3 and see what's happened in the market over the last 3. I'm gonna probably just pull this down and manage this off stream. I'll probably get ready to cut this position though if we break down anymore. But anyways, let's take a look. Okay, so let's put up the SPY here. Here's the S&P 500. All right, so yeah, we're gonna have to cut. Market's just ripping up. Oops. Okay, so yeah, we cut. We're down. But anyways, we're down less than $100. It's not the end of the world. Anyways, so let's take a look at the last Fed meetings, right? Let's just do 2024. All right, 2024, our Fed meeting was January 31st. So our Fed meeting was right here, right? You can see following the Fed meeting, here's January 31st. We had a big pullback, but then a big bounce back and continuation is normal, right? So we did get volatility here. You can kind of see the volatility. Make sure you guys can see this. So you can see the volatility that we got right here. But we did end up coming back and bounce back a heavy amount. The next one we had was March 20th. So March, let's keep going here. All right, so the next one we had was March 20th right here. So the next Fed meeting, we actually had a big rip up and a hold for the most part. So the next Fed meeting was right here. All right, so we had pretty big gains from the Fed meeting. You know, you get some people that act like we just crash every Fed meeting. That's not true. Again, the next one we had was April 1st, right? April 1st. Or May 1st, I'm sorry. So the next one we had was May 1st. Right here was the next Fed meeting. Right, this is actually it right here. So this was the next Fed meeting, which was mostly flat. We pushed up a lot, we retraced a lot, we ended mostly flat, right? But again, a pretty volatile day. But again, that day we didn't really drop very much, and we ended up bouncing back. And so we're kind of every other one we go up or down, up or down. A lot of the time it's balanced. If this trend continues, maybe we'll have green action tomorrow. You know, we don't know for sure. But the point is, the Fed meeting doesn't necessarily mean the market's going to go down. Yeah, I doubt we're going to cut rates. It's super unlikely. Should I buy Nvidia? I have no idea what you should do there. Yeah, GameStop is starting to creep up. It's back up to almost $30 a share here. So it's back up to almost 30. Again, the market's been dumping down now. Really, didn't the EU and Canada cut last week? Sure, they did, but that doesn't always mean... Like, Canada's insignificant towards the U.S. Like, the U.S. is not going to follow Canada in that way. The ECB is a more valid following argument, but, again, those are different economies. Again, we might cut. Again, we could cut. I'm not saying we're not. I'm saying probabilities in terms of, like... Here's an example of this, okay? So, every major FOMC meeting, one thing that's very consistent is these probabilities. These have been correct for a year straight in terms of the outcome of the Fed meeting. These have been correct for a year straight, right? So these probabilities have lined up very accurately, which signals a 0.6% chance, 0.6% chance, less than 1% of a cut Wednesday, you know, a 99.5% chance of another pause in rates. All right, 99.5%. So that is kind of where we are now. Yeah, again, payroll numbers were very high. If you look at payroll numbers from last week, non-farm payrolls came in at 272,000 versus an expected 185K. 2-month net revision was minus 15K. Previously, it was minus 22K. Unemployment came in at 4%. So, yeah, I mean, again, unemployment low, payrolls high. Usually not the signs of a recession, a depression, or a need for rate cuts. You know, the Fed's going to cut rates if they feel it's necessary. Typically, it means that we've had a weak economy, and higher than expected payroll numbers and low unemployment don't necessarily signal a weak economy. Now, again, when I say this, people get mad, but these are just the numbers, right? You can discredit any number by saying they're fake just because you don't like the answer. But the reality is, the numbers show a strong economy, a strong labor market. Now, again, it doesn't mean everything is rosy, because the real issue right now is not economic weakness. The real issue is too much spending has happened and inflation has gotten out of control. Prices are too high. People need to work more because prices are so high. And so I'm not saying everything's great. What I'm saying, as always, is that the priority should be inflation, which means that we should not cut rates, and we should instead. All right, so we ended up taking a couple of little day trades here in micros. We are now we're now down $38 on the day, but pretty small. But the point is, it's not time to cut rates. It's just not. The time right now is to combat inflation. Yeah, GameStop's at 29.70s. Yeah, 4% roughly. Correct. For a rate cut incentive to increase, CPI should come in low. If CPI comes in really low and we don't see as many inflation problems, it's more likely that the Fed in the future are going to cut rates, right? The Fed is not going to cut rates if, number one, the economy is strong and inflation is growing. Right, if inflation gets worse, the Fed's less likely to cut rates. If inflation gets better, the Fed is more likely to cut rates. Look at Nvidia spike up here, chat. Look at Nvidia spike up. Some news looks like just showed up for Nvidia. Let's see what it was. But yeah, so Nvidia just spiked. All right, so Meta Platforms is going to build cutting-edge AI tech for Europeans that reflect their language, geography, and cultural references. Maybe that's making Nvidia spike. Yeah, CrowdStrike was added to the S&P. I did see that. All right, chat. We got about 3 minutes, 3.5 minutes left. Sitting tight, watching the Q bounce. Again, we're probably gonna wait for the market open. It's too soon to the open to take any big positions here. All right, guys. So we're sitting here waiting. Look at the NASDAQ rip up. Again, Nvidia pop it up a little bit. I'm trying to see if there's any other news to justify it. All right, guys. Supermicro Semiconductors AI also confirms support. It's not that he wants us to feel pain. It's that he needs to slow the economy down so that inflation goes down low. It's part of economic process. Like the Fed will slow the economy down if he needs to, if inflation's a problem. But keeping it that way for too long causes more problems. So it's a balancing act. Yeah, I'm watching some other stuff. Gold moving up a little bit today as well. Home Depot bounced too. We bought Home Depot this morning. That's nice. Yeah. Is my mic not good? No, my mic should be okay. Let me know if it's not working. Is my mic working? Are we good? Can y'all hear well? You should be able to hear good. I can always turn my mic level up if it's better. If y'all want me to turn my mic up, let me know. All right, guys, here's the opening bell. We got 45 seconds. 45 seconds until the market opens, chat. Clear as crystal. Good. Yeah, GameStop sitting at $30. We'll see what it does at the opening bell. First open since Roaring Kitty spoke about it. Good. All right, cool. Sounds a little scratchy. Might be my voice alone. All right, guys, here's the opening bell. Hit the live button next to the play button. Make sure you're fully caught up on stream, guys. We got 10 seconds, roughly 5 seconds. All right, let's do this. NASDAQ is down significantly over the last 5 minutes, 10 minutes. All right, ding, ding, ding. There's the opening bell. We got Nvidia. Watch the previous closing price on Nvidia. Here's GameStop. GameStop dipping down a little bit so far, but we're pretty early in the open. All right, so NASDAQ coming down. GameStop falling down a little bit. Consolidation happening. Part of me wants to buy this dip too. Yeah, we just bought this. Again, we're looking to just play chop. We just sold that. Pretty much flat on the day now. Let's see what Nvidia does. Again, it's Nvidia split day, Nvidia bouncing. Alright, so now we're testing the bottom of that range here. GameStop dipping down to that previous closing price. Nvidia's falling down as well. So again, now we gotta just sit tight and wait. We're basically flat on the day now, which is good. We got ourselves back to flat after losing some. I guess I'm gonna buy this again and then maybe add one contract to it. It's a little risky. All right, so there's the 2 contracts here. There we go. We took half off. Can we go green on the day, chat? We got a really nice average at the bottom down here. There we go. Took half off, locked it in. We're basically flat on the day, slightly green now. All right, so we are effectively green on the day, chat. Nvidia bouncing back up a little bit. GameStop testing the previous closing price is sitting right at 28.20s. Q bouncing back some here. So we got ourselves back to green. That's nice. I'll take it. What happens to Apple in 3.5 hours? What if I have 0.7 Nvidia? Would I then get increased stocks? You would have 7 shares. Technically. Probably. I don't know for sure. It depends. Alright, so Nvidia just went green on the day. GameStop dumping down, though. GameStop's at under 28s now. AMC dipping down too here. WWDC, big AI announcements. Is WWDC today? Is it today? It is. (1 p.m. Pacific time). About 3 o'clock my time. Yeah, I mean, maybe. GameStop's still falling. Nvidia's starting to turn here, chat. Let me see. I would short, but it's too late. It's dipped a little bit too much for that. Yeah, so the keynote. Oh, it's 10. It's at 1 o'clock my time. Alright, so we're ripping up. I'm going to short this now. Kind of risky, but it's alright. 2 contracts. Trading small. Trying too hard here. We took half off, locked it in. Now we're red. It's taking too long. We took half off too. Slightly green, but very small. It's taking too long. Yeah, I'm just gonna cut that. So we're down a little bit now. We lost about 10 bucks. Again, maybe Apple is moving up. What's moving up today? We do have the WWDC later. The Q is moving up some. Again, I'm short biased here. I want to trade chop. All right, we got 2 contracts. We'll take 3. Took a piece of that off. Now we have 2 left. 4 contracts now. We're taking a little bit larger risks here. Flat, slightly green. And we took a little bit more off, locked that in. Took a little bit more off, locked that in. Again, the plan today was to trade chop, so we're out. We're up about 40 on the day. The plan today was to trade choppiness. So if we move up too much, again, the logic of these trades is that CPI, PPI, FOMC meetings coming out today. So all of these things considered, the market might be indecisive leading up to this. That's my guess here. I might be wrong though. Again, if you want to trade with me, I am trading on a platform called Apex's funded account program. Apex gives you a demo, and they test your skill with the demo account first. If you can pass the test with a demo, they fund you the same amount. This is a great middle ground for traders. If you're trying to learn to day trade and you're losing too much money, or you want to avoid losing money in the beginning, losing too much money, try a funded account program before you put up real money. Almost all day traders lose. You're probably going to lose with real money. Try a funded account program. It's much cheaper. The base one on Apex right now is the 250K challenge. You can get it for $16. If you try the challenge and lose, you lose $16 roughly pre-tax. It's about $18 after tax. If you take the 250K challenge and win, hit their profit target on a demo account first without hitting the max loss and following their rules, they fund you 250K with a 90% split. That way, you get a 90% split. It's similar to putting the money up yourself, but if you lose, you're out $18. It's just a noticeably less risk way to learn how to day trade. And most day traders trade futures. There's better liquidity in the futures market. You can buy market, sell market. You can see it's very similar to day trading stocks. There's just no PDT rule, and I can use these funded account programs. So if you want to check it out, there's the link. They are a sponsor. I'm biased. Remember, they pay me money. I might be terrible at this and have no idea what I'm talking about and be wildly wrong about everything I say. I do trade off stream. You're not going to see all my trades. This content is entertainment purposes only. Understand and consider the implications of CFTC 4.41, which states hypothetical or simulated performance results have limitations unlike actual performance. They do not represent actual trading, so forth and so on. Understand these rules, chat. And yeah, if you want to check it out, here is the link. Use coupon code BT. We'll get you the max discount. Again, most day traders lose. I think most day traders are going to lose here as well because most day traders lose. It doesn't matter where they trade. It's a lot cheaper to lose here, though. And that's the point I'm trying to make. And again, this is coming from somebody that's like, this is a 50K funded account on the left side that I'm up thousands of dollars in. On the right side, I've got about 100,000 liquid on Thinkorswim right now. So, I mean, I have lots of money sitting around. And I think there's use case arguments for both, you know. All right, so we're fighting back. Nvidia is still sitting pretty flat. GameStop's flat as well. I might short this. I think everybody thinks this is going to break out. And so we're going to take 2 contracts here short. We're up about 40 on the day, though. We'll see what we get. Again, plan is to trade chop. So now that we're moving up towards that range, 3 contracts now. Now that we're moving up towards that range, I'm going to start shorting. And if I'm wrong, I'm wrong. It's okay. I'm pretty much flat if we're wrong here, I think. But maybe we're not going to be wrong. Yeah, there we go. All right, we took half off. Just protect it. Take another piece off. We'll hold the rest. So now we're moving up some. Do I want to add more to this trade? I don't think so. Maybe I should have. All right, again, a plan is to trade choppiness on choppy days. All right, we got 2 contracts now. See if we can break down some more here. Kind of going back and forth now. We're waiting. we got green for a second. Now we're rejecting. There we go. Struggling. We break these highs, we're gonna have to cut this short position, but I want to give it time to flush. There we go. I don't know if it's trying to chop out short traders or what. Snow is almost at an all-time high. I don't know enough about snow to justify buying it or not. I really don't. I don't know enough about Snowflake to say yes or no to that position. I know it's down enough, so that fits my parameters of what I like buying and value. But again, the problem is that I don't know the company well enough and what it does to say yes or no. This is taking too long. I'm gonna get out of half of my positions here and just protect the trade. That way I can be a lot more loose and then maybe add to this if it does work. Okay, so there we go. It did work. We did flush and then we bounced all the way back. Very volatile candle here. We added a little bit of size back. We'll add one more contract here. There's 3. There we go. So choppy right now. This is what we thought we would get. It's catching the chop in an effective way is the hard part. All right, we took a little bit more off. We're up about 60 bucks on the day. Small little trades here, kind of attack and chop. I'm gonna add more to this, 2 contracts. See if we get a larger breakdown. There we go. Took some off. All right, so we're up about 70 on the day now. Building up a profit on the day. Pretty good accuracy. Check out my other sponsor, which is a company called Chart Prime. It's a TradingView service. You can use it stocks, crypto, Forex, futures, anything with a symbol on TradingView, you can use it. It's just a great way to learn how to predict patterns. So we were right about our choppiness behavior today. Look at that. We capitalized on it. We made some money on it, but look at that direction. Again, you can kind of see the choppiness in Nvidia. But yeah, again, if you want to check out the other sponsor of mine, it's a TradingView indicator service. I was always skeptical of these algorithmic companies, but again, then I started back testing their software and I was impressed, right? So again, let's back test just what we see on the screen right now, just today. Okay, so again, let's test this. Again, strong buy signal, you got to follow through. Sell signal showed up here, you did get a breakdown. Strong buy signal showed up here, it ripped all the way up to the top up here. Strong sell signal showed up there, nice breakdown. Strong buy signal showed up here. Beautiful follow through. Sell signal showed up here. Nice breakdown. Strong buy signal. This one looks like it works, but for argument's sake, we're going to claim it doesn't work. Just for argument's sake, because it's a little bit more ambiguous. But I think this would probably still work, but we're going to say it didn't just to be safe. Strong sell signal there. Nice little follow through. Buy signal there. Nice little bounce. Sell signal there. Nice little follow through. And so again, I only see one that didn't work. Unless I'm missing more. Yeah, this is just one that didn't work. So 1 out of 1, 2, 3, 4, let me get some of these out of the way. You can see it also shows you wedge breaks, triangles, flag patterns. I accidentally selected it too much. But yeah, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1 out of 10. So again, on the last, what I see is 90% accuracy for this. Genuinely impressive. And again, this is just a small piece of what they offer. You could use oscillators, screeners, back testers, a lot of really cool stuff, and honestly, genuinely impressive. Like I said, I was skeptical of these companies, but once I started testing them myself, I was impressed. I can't guarantee you're going to make money. I can't even guarantee that these are successful. They look successful to me, but always test them yourself. I can't guarantee you're going to make money. They pay me money. They're a sponsor of mine. I'm biased because they pay me money. Again, if you want to check them out, here's the link. Great way to help support the channel and our free content. Everything we put out there is free. We don't sell a course. We don't claim to be even good traders. We just try to give people cool tools as affiliates. And yeah, check them out. Yeah, so again, we're pulling all the way back. Nvidia dipping all the way back. GameStop trying to bounce up some. But yeah. Q dipping all the way back down. Again, I remember, chat, this is the biggest thing. Like, you want to see how I've been trading today? Look, I'm going to buy this dip. We bought it. What happened? Wait. Are we lagging here? Hold on. Uh-oh. Hey, baby. Oh my gosh, dude, it finally filled my orders, bro. I didn't even notice. It filled my 2 orders. I love you, buddy. Here, have a good day. Have a great day, bud. I love you, man. All right? Have a good day, buddy. Love you guys. All right, guys, it actually filled my orders. And now we're basically flat. I'm going to take half of this off, even though I think it's going to work here. I don't know what happened. I got a little bit of lag on my fills here. So we ended up losing money on this trade, which we shouldn't have lost on. Again, I didn't even notice it filled me until much later on, or we probably could have taken some profit when it ripped up there. Again, I'm going to sit tight, though. I don't think I'm going to add to this either. Now we're basically green. Alright, so we got out. Somehow I made money there on the last 2 trades. Somehow. Split is already here. So look, if you look at Nvidia, it's already split. It's at 118s in price. So like the split has already occurred. Yeah, GameStop down. Dang, dude. So I'm watching this video, and so this dude broke up with his girlfriend, and so afterwards the girlfriend came.
We got to go.
The girlfriend came and egged his house afterwards, right? And so you can see him pulling up in like a minivan and like egging his house. And so they're like, ah, ha, ha. And as they're driving away, right? As they're driving away, they run the red light. So they run a stop sign, and a car just, boom, just smashes into him. Oof, I hope they're okay, man. Despite, I can't say I never threw eggs at a house before, you know, when I was young and dumb. Especially, not even necessarily, I never really egged a house, but I definitely TP'd a couple friends' house as a joke. So, do you recommend going deep in stocks now or hold? I don't know. I have no idea what you should do. All right, guys. So I think that's gonna be it for me today. I just don't see anything else I really like. It's kind of boring day. Again, we're leading into the CPI FOMC week, and so again, if you haven't already, guys, subscribe. Listen, chat, on Wednesday, we're gonna get we're gonna get almost 100,000 views on Wednesday. During CPI, we'll have 5,000-6,000 people here watching it at 8:30. So at 8:30 on CPI day, on Wednesday at 8:30 in the morning, we're going to have thousands and thousands and thousands of people here. The FOMC meeting on Wednesday at 2 p.m. Eastern Standard Time, when the rate decision is announced, followed by the accompanying press conference, we will have 5, 6, 7,000 people watching this live stream. And so if you want to see a crazy stream for this channel, these are the biggest streams we ever do here on this channel. So again, if you haven't already, hit the subscribe button, hit the notification bell. I love you all. Y'all have a great day. Y'all be safe. And yeah, again, if you want to check out my sponsors, check out Apex if you want to learn to day trade with limited risk. It's a test of skill. You can't expect too much. Again, base one right now is $18. I think it ends tomorrow. I'm pretty sure the sale for Apex ends tomorrow. Let me see. But with the glitches that they've had going on, they might continue the sale, is my guess. But they might not. So again, the $18, they say it ends tomorrow in 1 day and 14 hours. So yeah, we got until the end of tomorrow, I guess. But y'all be safe. If you want to check them out, link is in the description. Y'all be good. Love you all. Y'all have a great day. And yeah, we'll see you guys later.